In a world where prices are rising faster than ever, how do companies like Nestle navigate the pressures of inflation while continuing to deliver value to customers? Today, we'll explore how these economic shifts are reshaping the future of business and what strategies Nestle can use to stay ahead of the curve. Hello, everyone. We are Team 21. My name is Samuel. I'm joined by Nicholas, Ariadna, and Victoria, and this is Nestle's Rising Costs and Inflation presentation. Today on the agenda, we're going to go through the introduction, move on to the what is happening, why this matters, the solution, and end with the conclusion.
Who is Nestle? Nestle is one of the largest multinational companies in the global food and beverage industry and were founded way back in 1867 by Henry Nestle in Vevey, Switzerland. If you have seen Nescafe for your morning coffee, KitKat for that sweet break, Purina for your pets, and Gerber for baby food, all at your local grocery store, then you might be surprised to know they are all owned by Nestle. In 2024, Nestle generated a whopping 10.7 billion Swiss francs in revenue. This allowed them to increase the dividend per share for their shareholders to 3.05 Swiss francs per share.
The issue our team is focusing on is the rising global costs driven by inflation and how that's impacting Nestle. Over the past few years, costs for raw materials, packaging, transportation, and energy have steadily increased. This is largely due to global inflation, which is being fueled by supply chain disruptions, geopolitical conflict, and climate-related agricultural issues. This is a global issue, not just limited to one market. Every region Nestle operates in is feeling the impact, especially emerging markets where even small price increases affect consumer behavior. Nestle now faces a tough choice: absorb these rising costs, which cut into profit margins, or pass them on to consumers, which can damage brand loyalty. As Nestle chairman Paul Buchel admitted last year, price hikes may have gone too far, impacting sales and consumers. This statement highlights the seriousness of the challenge and the need for strategic action. On the next slide, we'll break down why this matters so much at the top level. Thank you.
Why should we care about Nestle's challenges? It's not just about the company, it affects the consumers, the economy, and the market as a whole. First, higher operational costs and supply chain issues are hurting Nestle's profits. If costs keep rising, it could lead to higher prices for everyday products, impacting families, especially during times of inflation. Next, Nestle's market position is at risk. They've stayed on top by offering good quality at reasonable prices, but if they raise prices too much, people might turn to cheaper brands. How Nestle handles pricing will determine whether they stay a top choice for consumers. Lastly, it's important for us to understand these challenges. Nestle needs to innovate and adapt, like diversifying supply chains and focusing on sustainability to better manage costs and reduce risks. This isn't just about their survival, it's about how big companies can adapt in ways that benefit everyone. So, whether you're a consumer investor or just following business trends, knowing how Nestle handles these issues matters because it affects the products we buy, the prices we pay, and business sustainability in the future. Nestle's 2024 results show rising costs and supply chain issues are hurting profits, with net profits down 2.9% from 2023. While they grew by 2.2% in 2024, it's a big drop from 7.2% growth the previous year. The main reason is a smaller price increase, just 1.5% in 2024 compared to 7.5% in 2023. This suggests customers weren't willing to pay more because of rising costs. Their gross profit margin improved slightly to 46.7%, showing some efficiency, but operating profit dropped by 2.2% due to ongoing costs and supply chain problems. Though they raised their dividend by 1.7% and free cash flow grew by 2.5%, Nestle still faces challenges in managing costs and growth and will need to keep adjusting its strategies. To further illustrate the potential consequences from inflation, on this graph we can see the rising costs and decreased consumer spending for Nestle and their competitor Unilever. In the dark red line is Nestle, and we can see from 2020 to 2024 an overall decrease in sales.
Rising costs of raw materials, transportation, and production are a big challenge for businesses. To stay competitive and profitable, we need smart solutions. First, cost optimization. By improving supply chains, using automation and finding more affordable suppliers, we can reduce expenses without lowering quality. Second, product diversification. We should offer both affordable and premium products. Cheaper options will attract price sensitive customers, while high end products will keep our loyal buyers value quality. This way, we can serve different customers' needs and stay competitive. Third, strategic pricing and promotions. Instead of simply raising prices, we can use discounts, loyalty programs, and special offers. This will keep our customers engaged and encourage repeat purchases and strengthen our brands. By applying these three strategies, we can manage rising costs, protect profit, and stay strong in competitive market.
Let's take a moment to reflect on the key takeaways from the impact of these rising costs and inflation for Nestle. First, inflation has created significant pressure on several fronts. Raw materials, transportation costs, and labor expenses are all on the rise. This directly impacts the cost of doing business. Additionally, the global supply chain has faced increased pressures, leading to disruptions and inefficiencies that Nestle's been trying to manage carefully. In terms of consumer behavior, we've seen a shift in demand. As prices increase, consumers are becoming more selective and value-driven in their purchasing decisions, and this change in behavior presents both challenges as well as opportunities for Nestle to adapt to. Speaking of challenges, one of the biggest obstacles Nestle is facing is maintaining profitability while rising operational costs. The balance between keeping costs under control and delivering quality products is becoming ever more delicate. So, how is Nestle going to respond? The company is focusing on being more innovative with their product offerings and finding better ways to deliver value while meeting the changing needs of the consumer. Alongside this, there's a strong emphasis on their optimization, whether it's streamlining operations, improving supply chain efficiency, or just driving cost savings wherever it's possible. These strategic responses are essential for navigating the current landscape and positioning for Nestle's future success. That's all we have for you today. Thank you guys for listening and your time. If you have any questions, we'll be happy to answer those.